Hey guys, this is Shane. So I just want to go over one of the trades that I took today. So today is May 29th. Okay, Wednesday, May 29th. Just going over one of the trades real quick. I took about three trades. I'm actually still in those trades. All right, so it turned into a swing trade. All right, so with the approach that I'm going to show right now, this is more of like an intraday um slash swing trade type of thing. All right. So it can be a day trade, intraday trade. If the move you're looking for happens within the same day. If it doesn't, if you don't quite get the move you're looking for, you can just stay in the trade and you can swing it overnight, swing it for 2 or 3 days until you get the move that you're looking for. All right. So that means you have to buy time. So I bought contracts that's like a week out. So my contracts will expire next Friday. So not this week, not this coming Friday, but next week, Friday. All right. So those are some things to keep in mind. All right. So this is not so much scalping. One of the things that happen with scalping sometimes is you can get wicked out of your position. So in order to not get faked out or wicked out of your position, one of the things that you're going to need to do with this is you have to make sure that you position your position sizing is correct. All right. So that's very important because if you're in the trade too heavy, then if the trade, if you find yourself in a little bit of a drawdown, then you're gonna be worried. All right. You got to make sure that whatever position sizing you use, you got to make sure that your psychology can handle that size. All right. So if the trade goes against you a little bit, you can stay in the trade as long as the setup has not been invalidated. All right. So those are some key things just to remember and to some key things to bear in mind. All right. Because sometimes you will enter the trade and sometimes it will go against you first before it goes in your direction. But as long as you know your stop has not been hit, and as long as the setup is still in place, then the trade is still valid. So you don't want to be stopped out prematurely and lose money unnecessarily only for the trade to work out. All right. So, all right. So the ticker symbol, I'm on the daily chart right now, and this is Alibaba, ticker symbol BABA. So let's go ahead and see what I was looking at that um, caused me to want to try to take a trade on this. All right. So let's see what we got. So this concept is actually going to be based on the break and retest strategy. All right. So if we look at this chart right here, just to chart out the level, you can see we have a very clean level right here, right? So let's just put a line right here just so we can start to see it, the level. All right. So you can kind of see every time price came up to this level, we kind of got rejected, right? Rejected, 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 rejected. And finally, we break through it. We come back, and now we're holding the level. So when we come back, I'm looking for the price to hold the level. All right. So that's kind of what the idea is based on. No, I'm not going to sit here and pretend that this works 100% of the time. There are times when it will fail. All right. But it's still a high probability situation. All right. So um let's see. Even if I should extend this a little bit more, right? You can see that this is a level that the price likes to interact with a lot. So we can probably stop here. All right. And you can see even over here, all the way over here, price came to the level and we bounced at the level, came back, bounced at the level. All right. So price keep reacting at the level. So the way how we're going to draw our level is we're going to see we're going to look at all the different points where price likes to react. All right. So something like this right here. And then what we can do is we can use first little box tool and we can do something like this. And that's how we can draw our level. All right. So again, the idea here, price came down to the level and held it as demand. All right. Then the next time we came back here, we didn't quite get to the level here, but here we went down through the level, chopped around it. That will happen sometimes, chops around the level. And then the next time we come up to it, we reject it at the level. All right, so now the demand became supply. All right, now we came back and it's still supply, rejecting at the level every time. So all these were potential trades had we seen the setup, right? And then finally, we break through the level. So now what do we expect to happen? We expect that when we come back to the level, that it's going to act as demand again. And we're going to hold the level. Now you can see it's been holding the level. So the next time the price comes here, I'm looking for the level to hold. Now, my favorite time to trade this break and retest strategy is when the level has been untested. So for example, here, this was the first test of the level. This would have been like more high probability because the level has not been tested. And then you can see we had a second test right here and it worked really well both of these times. So now we're coming back down for the third time. So there's a greater chance that the level could fail because it's been tested a few times. The more times that the level gets tested like this, it's a higher chance that it could get broken. All right. So my favorite time to trade this would have been at the first test when the level had not been tested. You can say when it was unmitigated, that would have been my favorite time. But I'm still willing to try it. All right. So again, the key is just to make sure that your position size is not too heavy so you don't have to freak out if the trade goes against you. All right. And you don't have to exit the trade prematurely. All right. So this is what I'm looking at. Now, I like to take trades that have confluences. So I like to have more than one reasons to get into a trade, because the more reasons I have to get into a trade, then the higher the probability that the trade is going to work out in my favor. So what else do I have that would suggest that this could be a good trade? All right. So if I should turn on my 200 200-day moving average right here. All right, you can see it's kind of right at the level. All right. So a lot of times this is the daily chart. All right. So sometimes I'll use the moving average, like the 100-day moving average or the 200-day moving average. And a lot of times the price likes to bounce off of the moving average, but you don't want to just use it and like just randomly. It has to be in specific areas on the chart. It has to be in key areas on the chart. All right. So this is a key area. Can you see price likes to react at this level? So if the moving average is lining up with the level, then that gives me confluence. And this lets me know that this could be one of the times when the price might bounce off of that moving average because it's right there at a key level. So I don't just use moving averages just to use them. I don't always have moving averages on my chart, but when I chart out my levels, so if I find a strong level like this one, or if I find like say a trend line on a higher time frame and the price keeps bouncing off that trend line and it lines up with a moving day average, like a 100-day or a 200-day moving average, then that gives me confluence and lets me know, all right, the price could bounce here again. So I have a little bit of a confluence here. So that's another reason why I said, all right, let me position correctly. Let me have the right position size, and let me see if the price will hold here another time and see if we can get a move up out of here. All right, so let's see what happened today. So let's play this forward a little bit. And you can see this is where we are. All right, so you can see price came down into the level, and we are starting to get a reaction here. So I'm still in this trade. I'm looking for a bigger move here. All right, so there are times when you take a trade like this and you just get a nice big fat candle just like that, and then you just be done. Sometimes, you know, within 10 minutes, you get a nice big candle and you'll be done. But sometimes it's going to take a little bit more time. All right. So if you go down to the 5-minute chart, just to see what this looks like down here, you just do this, clean up the chart a little bit. All right. Then you can see once the price, this is where the market opened. All right. As you can see, that's 930 right here. So as the price came down into the level at market open, then the entry would have been here. And now you can see price ran all the way up. And then this is where you have to be patient. I mean, if you want to take this, then you could have got out up here and that could have been your profit for the day. But I'm looking for a little bit of a bigger move than this. So I'm still in the trade. So as you can see, kind of chopped around a little bit. And then if you put your fib on here, the golden pocket, all right, then you can see price came down into the fib level. This could be an entry right here. So even if we miss the entry right off the open, once the price comes back into the fib level, which is the golden pocket, then you can see that's a great entry as well. All right, then the price, we just moved up from there. And now we have a little bit of a retracement here, but based on the higher time frame setup on the daily chart, I'm hoping to get a bigger move out of here. I'm hoping to get a bigger move from this. All right. So I'm also in other trades. So if this trade fails, then the other trades that I'm in should be able to make up for this trade. So even if this trade should fail and I should lose money, as long as we're holding this level, I should be fine. But if we lose this level and I take a small loss on this, then the other trades that I'm in some other trades that's actually going in my favor right now. So those should make up for whatever losses, if a loss should happen. But hopefully the level will hold and we can get a bigger move. Time will tell. All right. So this is a break and retest strategy on the higher time frame. Okay, this is the daily chart. So because it's the daily chart, this makes for a stronger level. Okay, so it's going to be stronger than the 1-hour chart. It's going to be stronger than the 15-minute chart. It's going to be stronger than the 5-minute chart. And that's another reason why it's going to make the level really strong. All right. So that's the break and retest strategy in confluence with the 200 SMA, 200-day moving average. All right, so hopefully this made sense to you. Hopefully you got some value out of this, and maybe this is one of the tools that you can add to your bag of tools, your bag of tricks, and hopefully it will be helpful to you. All right, so happy trading.